Hello, everyone. Welcome back to another Market Open live stream. Wow, we have a pretty dang red market today, and that's exactly what we're going to be talking about a lot today. I'm going to be talking about why this is happening, what's going on. But first, take a look at just CNBC here. Look at this disaster here. You got the red bar. Bitcoin drops 10% to below 43,000 as risky assets tumble globally. Regulatory concerns intensify. Dow Jones futures down 1.85%. S&P futures down 1.67%. NASDAQ futures down 1.64%. Oil's down 1.75. The 10-year Treasury yield is down 1% to 1.31%. You've just got a mess happening in the market right now. Now, a lot of this is happening for reasons because of, well, there are two things. We've kind of been on this downtrend in the last few weeks here, and a lot of this has been because of valuation fears and concerns. We did see stocks get, let's see here. There we go. We did see stocks get a bunch of support sort of at the end of August as really Delta was starting to, or still kind of continuing to surge. In a weird way, stocks actually did kind of well. And now we're kind of seeing stocks not do so well, which makes sense because, well, we've got the Evergrande disaster happening in China. We've got Delta kind of not doing as horribly as it used to. So the potential move into U.S. stocks that was pushed by Delta is now maybe potentially going away at the same time as us seeing slower growth than we expected. So you've kind of got a little bit of a pull out of U.S. stocks as Delta was not getting as bad as we thought it would, which is good. You've got this concern over growth slowing down. You've got this valuation concern for the stock market. And then really the big catalyst that's just lighting everything on fire is the Evergrande crisis. Put on top of that, the uncertainty that comes with the Federal Reserve having their taper meeting this week, which we expect them to delay that to November. You've got lots of uncertainty going on regarding what's potentially going to come of the infrastructure package. You've got the bipartisan infrastructure package that's supposed to have a vote on the 27th, which is next Monday. If that gets delayed, it's going to potentially hurt progress for either of the infrastructure packages. The bigger infrastructure package is having its own issues. The immigration portion of the bill just got slapped upside the head. So that there won't be a pathway to legal immigration inside the bill. You've got concerns over Nancy Pelosi not being able to actually get enough support. She could only get 3 votes, or could only lose 3 votes in the House. And right now it looks like she will lose those 3 votes and the bill isn't even complete the way it is. So you've got so much going on, and throw on top of that the fact that inside that infrastructure bill, you've got things like capital gains tax increases, other tax increases, tax changes for carried interest. You've got lots of spending that won't directly help the market immediately, but instead would help the market over the next 10 years. So it'll be very different from the stimulative sort of boost that we've been used to. And you've got the debt ceiling discussion. So I think what I literally just spewed out here in the last 2 minutes is it creates a perfect recipe or stew of crap. Like literally just ugly, nasty crap, and that's just the what we're in right now. It's unfortunate, but anyway. Okay, let's go ahead and take a look at how stocks are behaving in the pre-market here on an individual level. It's also actually, you know what? Let's also start with crypto here quickly. So going over to CoinMarketCap. Let's see here. There we go. It is worth noting that in the middle of the night, it was like 1 a.m. No, it was closer to 1:30. Anyway, closer to 1:30 a.m. Yes, I was awake 5 hours ago, 4.5 hours ago, 4 hours ago. Anyway, I did send a massive alert in terms of a move that I was making in crypto, a move that I was making in a bunch of stocks. And let's just say I've got more cash available now than I have ever had before. So I'm ready to go buy the dip shopping, okay? But I ain't buying the dip right now. Yeah. Anyway. All right. So let's go ahead and take a peek over here. After taking a sip of some level 99 fire cafe. All right. So you've got Bitcoin. Bitcoin right now down to 43,423. Sharp sell-off here in the cryptocurrency space, including Cardano here down at $2.08. Ethereum down at $3,015. Solana down to 139 here. Binance Coin 367. Polkadot's down as well. Dogecoin down to 20 cents, just under 21 cents here. Got a lot of pain happening in really anything that is risk on related. And you're going to see that over here. How much cash? About 5.4 that I'm excited to use to buy the dip with. Anyway, we've got the volatility index. I tweeted this as well, by the way. It's this part about the volatility index. Check this out. And I'll pull up the little chart here too. But I tweeted, that's why you should follow me on Twitter too. Talked about like here this morning. I see 4 hours ago, the stock crypto sell-off might get worse. I wrote a few things here, but of course the specific alerts in terms of buys, sells, or whatever. The whole message is in the Stocks and Psychology of Money group, which you know that coupon code expires on Friday. You can check that out, link down below. But more importantly, look at this. Or maybe just as importantly, this is the volatility index. And 4 hours ago, I wrote the volatility index, the VIX, also known as the fear index, has presently had its largest increase since May 12th. And you might remember that May 12th was a very beautiful buying opportunity. So if you go to year to date here and you go to May 12th, you can see here, May 12th, we got to a reading of 27.59. And so we are presently experiencing the largest spike since that. We have not beaten that spike yet, since that spike did bring us up to 27.59. But we certainly have a substantial spike here in volatility. Sometimes the volatility index usually does not stay elevated for more than a day. Sometimes it has sort of this double peak. You see this double peak that we have over here. Usually the first day is worse than the next day of sort of a kind of market move, which that's worth noting. You did have a double peak over here in February and March, but the May peak really shot up to about 21.84. Next day, 27.59. Next day actually fell down to 23.13. So it begs the question, is the fear index right now the first part of this raise, or is it already the peak? And would this fear index be going back down tomorrow? I don't know. It certainly is possible that we could easily get back to a higher level here. Let me go out to a year. A year is going to give me this October run. See, in October, we had this interesting move in the volatility index where we kind of shot up right here, right before the election to about 29, went down for a day or so, then shot up to 32, then shot up even beyond that. So we really have a precedent for this kind of a movement here, and it wouldn't be shocking to see this go up substantially more, especially if this pain sort of continues here in the market. All right. So then we've got, let's look at the actual movements here in stocks. So you actually do have a couple of survivors here doing well. Wait, hold on a sec. Wait. Hold on a second. Wait a minute. They just updated this. Last with pre. Where's the pre-market change? Oh, here we go. They just updated Webull, and it's all weird. There we go. Okay, never mind that thing about the survivors. Yeah. We have 3 things that are red. I'm sorry, 3 things that are green today. Everything else is red. Literally everything else is red. Smile Direct, which ran as much as 20% in the pre-market this morning. I watched it this morning and I'm like, whoa, like where did that come from? And it had a big old move this morning. Then really gotta fix this thing. This silly little book I have here, the binding of it ripped. I just gotta probably put some glue on it. Oh well. Anyway, Smile Direct was up as much as 20% this morning, and now it's only up about 3%. And you can pretty much see here that nothing's doing great. So in case you're just now joining, I would recommend watching the beginning of the video back. Watch it back at like 2 minutes because I talk a lot about what the HE double hockey sticks is happening. Now we're going to look at the sticks, and then obviously we'll get into market open and talking a little bit more. But I do highly recommend you watch the beginning of this video. Okay, so yeah, I mean, look, everything's red. Essentially, with the exception of these three things here. I wouldn't be surprised if Smile Direct ends up going red as well. In fact, as I'm talking about it, it's going from a 3% gain to a 2% gain. It's kind of rotating down. The biggest losers right now in the pre-market are GREE, which is support.com, the merger here, HUD8, which is down 10%, Marathon Digital, which is down 950. That's my old area code. Hive, Riot, MicroStrategy, pretty much anything IronNet, anything crypto related here is absolutely getting decimated. As we saw a few minutes ago, the crypto market is selling off. I did send a big crypto alert to everybody in the Stocks and Psych group this morning, as well as some other stock alerts that helped me raise some cash. Affirm is at 6.35% to the downside. I've got some covered calls on this one at 115, so those will be doing nice. But otherwise, there's definitely going to be some real pain here. You've got Lemonade down to 69, AMC down 5.88% to 41.6, Matterport down 5.75, Tattooed Chef, same thing. A lot of pain here. It looks like SPACs and potentially some higher valuation companies are some of the larger sell-offs here, including Lucid, Blink, Arrival, though Invitae. Though mixed in, you do have Palantir, which was a direct listing. You've got Arcimoto, another one. Let's see, Dutch Bros selling off again. Upstarts coming down 4.4. Enphase, look at this, sitting at 154 right now. MP Materials at 32. A lot of these numbers, by the way, aren't like substantially low at the moment. You know, this is, in my opinion, not necessarily where I think this is really a buy the dip opportunity, because I don't really think that these prices are a dip. Like, I don't really believe that 154 is a big dip. We've kind of been seeing that number for a while in the last few weeks. I don't really believe that ChargePoint sitting at $20.34 is a big dip. We've kind of been waiting for it to go under $20 anyway. Look, Palantir at $27.24. I don't really see this as a big dip right now. I think there's a lot more work to do on that. In fact, let me see if I still have my Palantir options, because last week we did fortunately close multiple positions, specifically option contracts. Yeah, including we did close it last week. See, last week I closed options on Google, Palantir. There were quite a few things. I can't remember all of them, but I closed quite a few call contracts that were up and doing very well last week. And yeah, okay, no, the Palantir. Well, unless it's in Robinhood, I'm pretty sure it's gone. I will check here though. Could be over here in Robinhood. Let me check that really quick. Well, I can't really trade option contracts anyway until the market opens. Checking. Yeah, no, okay. All right, I got rid of that. Okay, good. So, yeah, Palantir obviously had a remarkable week last week. And I remember what I said last week. I said, don't be afraid to take profits when some of your call options are green, because they can evaporate very, very quickly. I was raising cash last week as well. I raised cash a little bit more this morning, around 1:15 to 1:30 a.m. And yeah, now I'm excited. Again, though, I'm really looking for like real dips here, because Coinbase at 232, like, yeah, who cares? It's been sitting there basically since it IPO'd. So not like a huge sort of exciting dip where I'm like, oh my gosh, this is the best deal ever, right? We're just not there yet. NEO is sitting at 35.99. That used to be really good, but you've got a lot of discounting here because of the disaster in China. Win sitting at $80, same thing. SoFi at 14.54. We've seen some of these prices before, not too recently. So really, this downdraft here in the market, not horribly much at the moment. So even though the indices feel really painful, and we feel like a lot of this is concentrated at the same time, there is a part of me that's very concerned that this kind of sell-off and downdraft that we're seeing is really just the beginning. because again, we haven't actually seen prices go down that much. I mean, look at Tesla here. And again, this is really just a start here, but Tesla's down 3% today. But look at the trend it's been on since May. Like, okay, who cares? 3%. Or what is that going to be? 740 or whatever is going to be right here where my mouse is. Okay, what? Like, I'm supposed to get excited about that? Like, this is not even going to wake me up. I'm going to fall asleep before I care about that. So, like I'm saying here, if this Evergrande grand issue and this broader sort of global risk liquidity or sell-off is going to continue, liquidity raise and sell-off is going to continue, then we have a lot of work to do in terms of damage of stock prices, because they're high. And so I think there's a lot of capacity for a further drawdown. I mean, wow, really? Google and Apple down 1.65%? Like, big deal, right? And I recognize, these are the heavier weights in our indices here. You go to CNBC, these are our indices being down. Now the Dow's accelerated down further to about 1.91%, 1.73, 1.7 here on S&P and NASDAQ, slightly lower than where we were about 18 minutes ago, so still heading in that downside direction. Same thing with the NASDAQ futures. And if I go ahead and I'm just going to take, with these sort of more global sell-offs, or risk sell-offs, it really doesn't matter what coin you look at. You could pretty much just look at one, and you kind of get your tell for the entire market. This is not like a coin based sell-off. It's more broad, right? Here's the minute chart where you're actually trying to see a little bit of a recovery from 43.3 up to 43.7 on Bitcoin. Do know though that crypto is some of the most heavily traded institutional what do I want to call it? Asset that exists. About 70% of trading that happens in cryptocurrency is institutional driven, and so we're trying to see a little tiny bit of a bounce over here. But you can see the broader trend here on the 15-minute chart is substantially to the downside. Though again, we do have a green candlestick there on BTC right now within the last 15 minutes here since we checked in on it. So yeah, look, no, we're not actually expecting a taper to come anytime soon from the Federal Reserve. The Federal Reserve, however, does not really care about stock prices, even though that might seem crazy because they bailed the crap out of the stock market last year. The Federal Reserve doesn't really care about that. There's a disconnect between when the Federal Reserve is going to taper and what economic conditions are. The Fed cares more about inflation and jobs than they care about stock prices. So if you're expecting Jerome Powell to come out and coddle you, when we have the FOMC meeting, I think you're going to be sadly disappointed. So I would not anticipate that. Okay, so anyway. Let's take a brief momentary look right here for what it's worth, because this is a big deal driving the market's pain right now.
That homeowners are also going to be made whole as well. So that's the thinking behind what people here believe Beijing is going to, how Beijing is going to move next. Carl?
We'll see.
Eunice, thank you. Eunice Yoon in Beijing, obviously rapidly evolving situation as we get closer to those debt payment deadlines during the week, Jim. There's the bank and the financial aspect. There's also the labor aspect. They hire Evergrande almost 4 million workers every year to develop various projects and have 200,000 employees of their own.
Well, as usual, Eunice is spot on. Those people, the Chinese government doesn't want to hurt. They do want to hurt the rich people as part of common prosperity. Do we really need the people?
Okay, I'm going to pull off this. So a little bit of a recovery here right now in for example, Hut 8's price, which makes sense because of that 15-minute chart that we just saw here. I do see a comment here. Somebody essentially saying, Kevin, the Fed doesn't care about stock prices? LOL, Kevin. Well, look, the reality is all you have to do is look at February when the market started falling and everybody was expecting Jerome Powell to coddle the stock market, and he didn't, because he cares about inflation and jobs as his top priority. Now, sometimes responding to a crush in inflation or responding to a weak job market is essentially printing a lot of money, which has the effect of propping up the stock market as well, even to the point where the Federal Reserve was buying corporate bonds to help show support for the market. But the primary intention was not asset prices. It was that was a byproduct of the madness that happened. And so I'm saying that because if you're thinking Jerome Powell's going to come bail out the stock market, because we have a few red days. It would not be something that I would trade off of. Let's say that I would be more inclined to trade, take the opposite end of that trade. Anyway, crypto right now is again trying to recover a little bit. BTC bouncing off of that 42.5 level here. Still a lot of pain in the market. Still at some of the lowest levels we've been at in a hot minute here. And if you know what I would say, this is the lowest we've been at since beginning of August or so. So we've had our rally, but it doesn't give us a lot of support either. So sitting at 43,675 right now. 43,675. Yeah, somewhere bouncing off somewhere around the bottom of these guys over here. So we'll see where this goes. That's on the day chart. Again, 5-15 minute looking a little better with recovery here. And that is helping soften the blow a little bit to some of the crypto miners. But we'll see how that lasts. In the meantime, we've got 7 minutes until the market opens. You've got CNBC and the indices here pulling up a little bit here. Dow futures were down 1.9. We were in the 1.7s over here. So a tiny little bit of a recovery. So we'll see. We'll see how this goes. But again, the pricing that, I mean, like a firm like 108, 109, it's not like a horribly exceptional deal. So I hate to sound like, oh my gosh, like there's so much red, but it's not a buy the dip opportunity. But like literally, this is not but there's no dip. There's no dip yet. This is like a Matterport, for example, ran insanely to $22. Okay, cool. Congratulations. But it's like barely been here at $21, $22. These are some of the highest levels it's been at in quite a while. So look at it. It's down 5.6%. Well, it was up 5%, 5.5% on Friday. It's almost like the market is just giving back Friday right now. So not blown away in terms of buying opportunities here. More preparing for the potential that the saga continues. So here, let me go into end phase here. See, I would be much more interested in seeing end phase trade substantially below this line for a longer period of time. That to me would be a little bit more of a tell. See, if I go out to the day chart, we'll see that fall in May. Let's go here. There we go. So here we go. We see this sort of dance underneath the line over here, dance on top of the line over here. This May fall. This is when you really have pain in the market. When you see a stock like Enphase sitting at 120 to 108, becomes so much pain in the market that all of a sudden you have the company itself buying back its shares. That's interesting to me. That's now all of a sudden when we're really starting to get to some pain. A charge point sitting on this support line isn't particularly an opportunity in my opinion. Neither is Wayfair at 280 or whatever. So let's just see what some coverage is here. What we've got on headline news. So it's just a warm up. Oh, that's what it feels like. Yeah. Not coin. I need to turn the fans on. Where are the fans? There we go. Perfect. All right. So top of Bloomberg, which it's worth noting, Bloomberg is pretty popular amongst institutions and traders. And if traders trade 70% of cryptocurrency, then I would expect some selling to create liquidity for other opportunities. And when you have Bloomberg takes a beating as the top story on Bloomberg.com, or Bitcoin takes a beating as the top story on Bloomberg.com, it could potentially push things down a little bit more. I'm planning a video also on the Solano blackout. Stay tuned on that, maybe later today. But anywho, warm coffee now, not hot anymore. Darn. All right, so take a look at this. This is beautiful. This is the buckle up talk, right? Yeah. Morgan Stanley sees growing risk of a 20% drop in the S&P. That is substantial. A 20% drop in the S&P 500 is very, very substantial. And it is something that I would be closely monitoring. Is it possible that we're going to extend substantially past a 5% correction in the S&P? Let's see here. Let's go to, before I actually read this, S&P 500. Oh, goodness gracious. Oh my gosh. Hold on. S&P 500. There you go. All right, S&P 500. So take a look at this. You've got, where was our last 5% correction? Last 5% correction was really here in what is this, September down to October, November. There you had about, there you go. Okay, so here was your last 5% correction in the S&P 500, where you had this October to really beginning of November sell down of about 6.4-ish%. If I go out a little bit more, you also see some pain here in September, where you go, yeah, okay, you could kind of see a five, yeah, there we go. August 28th to September 25th, you had about that 5.97% drawdown. So you had a 5.97% drawdown here. You had a 6% drawdown here in October. So end of September and then October. Well, actually, beginning of September and then end of October. You had these larger drawdowns of 5 to 6%. We have not seen a 5 to 6% decline in the S&P 500 at any time really recently here. If we just go back to the beginning of 5 days ago to where we are now, we're only down a percent, although I don't think this incorporates the pre-market here. So 45.36, and what's our pre-market here? CNBC. Market's recovering a little bit right now, actually, which is really good. 43.54. So let's see here. 43.54 divided by the high of 45.36. 45.36. That's about a 4% decline right there. So if we declined another percent or so, we'd finally get to that 5%. To actually get something like a larger drop off, a 20% or something like that, I mean, we'd have to go down to somewhere like 3,700, which is a level we have not seen since really February. See, if we pull back to February, yeah, that'd probably be about a 20-ish% decline if we actually had something like that, which would potentially line up with something like what Morgan Stanley was talking about here. Let's get ready for the bell, though, as things are recovering slightly here. Still seeing that crypto bounce off the bottom here. Seeing a little bit of happiness coming back into some stocks here. Let's get the bell here. Let's listen in, and then we'll come back to the sticks.
When the Chinese government's happy enough to say that we have common prosperity, they will then help the people. But we have to just understand she has an agenda. And his agenda is to make it so the rich, it's Robin Hood. Don't buy Robin Hood off this.
Oh, look at that red.
You know, an analogy.
All right, I hear that opening bell, even though we don't see it, Carl.
Woo!
There is the opening bell in the CNBC real-time exchange. At the big board, it's urban air mobility company Archer Aviation, celebrating a listing via SPAC. At the NASDAQ, Fulton Financial, a financial services holding company. As breath is rolling in, obviously heavily negative, Jim. I guess.
All right, let's go ahead and hop on to the sticks over here. So take a peek. Sticks. S&P 500. It looks like it was going. See, this is that gain we were seeing going towards the opening here. Red candlestick at the open though. So Smile Direct, Outlet, and Blue Sky Digital still the only things that I really see as green here. Oh, there we go. No, we got a few more things green. Look at that. Delta, American Airlines went green. United Airlines, MP Materials. Okay, so some things actually going green here, including yeah. Look at the airlines. The airlines bouncing a little bit here. Okay, so a little bit of love coming to the market. That's good. It's almost like you had this pre-market discount that's being bought up. Yeah, look at that. Tesla just gained about 1%. That's incredible. A little bit of a pre-market bounce here, no doubt. Let's look at MTTR. MTTR, that's down. Okay, so you're getting a wedge here where things like Arcimoto, Matterport, these things are falling a little bit more than they were. But let's see here. There we go. Let's see. Affirm. Some things are actually bouncing back. Affirm's dancing a little bit. Arcimoto dancing a little bit. This had a nice little push up here for a moment. Okay. Let's see here. Then. Interesting. So what a bizarro market here. HUD 8 mining only down about 8.6 right now. Was down about 10%. Redfin's still down 5.8%. Redfin's turning more red. EXPI is turning more red. Shift is actually popping up after the sell-off. You've got Arcimoto trending to the upside. We've got, let's see here, Clever trying to move this. Very interesting. Look at that. Lemonade popping up a little bit here. It's almost like you got a little too depressed there and too sold off in the pre-market. You have Tattooed Chef recovering. Is Matterport doing that kind of recovery as well? A little bit. This is why it not so terribly exciting to buy any of this dip yet. Where are the things that went green? Like, where's Delta? Where are they? We just saw them. Delta Airlines. No, Delta. What is that? What? This is confusing. Look at that. Delta opened green. Now all of a sudden it's sharply declining. This is so weird. You've got American Airlines opening green, running green, sharp decline to the downside. Dutch Bros was pretty sold off in the pre-market, and you've still got a recovery in Bros here. Yeah, the market's really trying to find itself right now. Let's see here. HUD 8, 8.13. That's better than where it was before. Affirm 5.33. Li Auto, Redfin, Gevo, Lordstown. This is some incredible volatility here. Neo sitting down 4-ish% here. Matterport 4-ish%, not as substantial as it was before. Crypto trying to come back a little bit. Doge just over 21. Ethereum trying to get back to that 31 level at 30.56 right now, which is higher than where it was a little bit ago. 43.88.72 here on Bitcoin, also a little bit higher than where it was. Tesla gained 1% there at the open and now appears to be a little bit more sideways. Now Dutch Bros appears to be slowing down as well, 2.5%. This is just a bizarre open. Very, very weird. It's almost like the market is just very tentative and uncertain here. See, look at that. S&P 500 turned red, but now going green again a little bit. So how are the underlyings doing here, like Google and that? A little sideways. Google's down 2%. AAPL 1%. Not a dip that I'm jumping up and down about buying. It's a relatively nominal dip here. We're still at high prices, and if anything, this is a potential just like little warning sign to maybe take advantage of some higher prices of some particular stocks, to prepare to buy a larger dip. If we have a larger dip, we might not have a higher dip. But wow, the market's been relatively resilient here given the pain in the pre-market, with the market not falling more, rather stabilizing and in some cases increasing a little bit. Let's see how the indices look right now. Yeah, look at that. Indices certainly recovered here. You've got, sure, this headline, this is the worst sell-off since July, but the Dow was just down 1.9% in pre-market, and now it's only down 1.39. S&P and NASDAQ were down about 1.7, now only down about 1.37, 1.63. Russell 2000 actually went positive. That's a reversal of about 1.5%. It's really incredible. Let's see here. So what a incredibly bizarre open we have here. AMC, let's take a look at AMC. How AMC is behaving in this. There we go. AMC had a nice little bounce, but now trading a little bit more on the sideways direction, still down about 5%. MTTR at some high prices right now, still down about 6.2%, trading a little bit sideways. You've got Lucid down about 4.31%. Arcimoto, FUV sitting also about slightly sideways here. I think the market's really trying to figure out what it wants to do here. S&P 500 does look like it's trying to gain a little bit. And let's see what is actually green now. A few things green here. Costco, Smile Direct, barely. Domino's, certainly a lot of red. Palantir, EXPI. Hard to tell exactly the direction of where the market's going to take us today. It's kind of like the market's trying to figure it out itself. But with headlines like this, Morgan Stanley sees growing risk of 20% drop in the S&P 500. A lot of folks are going to be pretty nervous. If you're just now joining, make sure to watch the beginning part of this video where I break down all of the reasons for the madness that's happening. There are so many reasons creating this uncertainty stew that I'm talking about. And it's not just Evergrande. It's also that reversal of Delta. It's also the debt ceiling. It's Federal Reserve Chairman Jerome Powell, who's not going to be bailing us out at the FOMC meeting. Higher valuations, slowing growth, so many things. And so it makes sense in part that Morgan Stanley, for example, might suggest a 20% drop in the S&P 500. Again, we haven't seen that kind of drop in a very, very long time. We haven't even seen a 5% decline in the S&P 500 since last October. We have not seen a 5% S&P decline, and really we're still about 1% away from a 5% S&P 500 decline. So not a real buy the dip opportunity, in my opinion, just more of a, in some cases, a little bit of a warning shot of maybe take some profits on some stocks that have some nice gains and prepare for a larger buy the dip. We might not get that larger buy the dip though. So I would certainly never recommend liquidating your entire portfolio, but I would raise cash in opportunities where I felt a little bit more interested in realizing some profits. Worth noting, two things, and then I want to check this article out here. Two things. Number one, you could get a free stock with Public by going to metkevin.com/public, get up to $70 totally for free, and of course, use that coupon code for 40% off the amazing programs on Building Your Wealth, link down below. That does expire this Friday the 24th. The price will be going up thanks to this temporary inflation that we've got going on. And you'll see a larger transaction that I made this morning to free up some cash, and that has to do with crypto and stocks. Okay, so let's take a look at this. Morgan Stanley calling for a potential 20% S&P 500 sell-off. While they believe this is a worst-case scenario, the bank said that evidence is starting to point to weaker growth and falling consumer confidence. That this is also true. This is very much a reiteration. We're seeing this. Falling consumer confidence, weaker growth. You've also got inflation that's been higher for longer, and that's certainly weighing on individuals' consumer confidence. And so you've seen as inflation has gone up, consumer confidence has shaved substantially. In a note on Monday, strategists laid out two directions for the U.S. markets, which they dubbed as fire and ice. The fire outcome, the more optimistic view, the Federal Reserve pulls away stimulus to keep the economy from running too hot. A typical fire outcome would lead to a modest and healthy 10% S&P 500 correction. The more bearish ice scenario that's gaining traction, as strategists said, laying out a picture in which the economy sharply decelerates and earnings get squeezed. So this is actually, fire and ice are both bad. Fire would be a 10% reduction, and looks like ice would be a little more than that as earnings decline slightly, potentially in the direction of 20%. Will it be fire or ice? We don't know, but the ice scenario would be worse for markets, and we're leaning in that direction. We think the mid-cycle transition will end with the rolling correction finally hitting the S&P 500. Yikes. We'll see what happens there. Did get a little bit more green here, just a few more, including the Russell. Russell being green is pretty incredible right now. Domino's pretty much straight up since the bell here. Restoration Hardware, same thing. Target, same thing. Nice recovery in some of these stocks. You got consumer staple there of Target. Got Delta coming up. Piton's only down 0.55%. Nice recovery here. So, I mean, this is the incredible resilience of this market, is that even though we had such a bloody pre-market here, things really were covering into the morning here. Certainly, at least some stocks like Airbnb, Target, Apple, Salesforce, Facebook. Yep, Facebook a little bit more sideways here. let's go ahead and draw down to crypto here and then look at the larger losers. So crypto also bouncing nicely. And let's grab it here, 43.8. Yeah, you've got that bounce that we've been watching here. This is now on the 5-minute chart. And so still seeing that. Do have let's look at the larger losers here. So you do have a continued, looks like sell-off slightly in EXPI, Hive, Hut 8. These mostly just holding on to the losses that you saw sort of in the pre-market here. Playboy, Microvision, these guys down about 5%. Dutch Bros been pretty volatile. You went as low as just a 1% decline. Now back down to about a 4% decline. Kind of messy. Let's see what else we have here. And I'll look at some headlines that we have in the terminal as well. Yeah, it does look like indices are recovering. Yeah, S&P 500 and Dow both recovering. Both down just now 1.16%, S&P 1.21%. Both of these recovering here. We got, let's see here. Okay, same sort of headlines here about Evergrande. We've talked about that. We talked about crypto. We talked about the 20% decline here on Bloomberg from the Morgan Stanley projections. No real particular other news. I'm going to look at the terminal here just to see top news. Let's see here. Top. All right, let's see here. Okay, the Fed can't fix, right? Okay, Bitcoin falls, USDs, realtors, blah, blah, blah. Powell's fighting for the minds of the people. Yeah, kind of boring. Let me see here. 10-year. Let's look at the 10-year as well. Sometimes we can see people buying bonds as a flight to safety, and then as people buy, the price goes up and the yield falls. Bond yields recovering a tiny little bit. Look at this. This is kind of a symbol of the pain that you've seen in the market here. Let me hide myself for a moment. So you could really see this drawdown here as the market was preparing to open, but now all of a sudden it's like treasuries are selling off again as the market is recovering. So you're seeing those yields go up again, sitting at about 1.33. So that pain sort of evaporating, that max pain. Looks like max pain was really somewhere around 8:18 a.m., which is about 5:18 a.m. California time. So about an hour and a half ago for about max pain. A market being open now, seeing a recovery here. Not much of a dip here. Again, more broadly speaking, a lot of these stocks still at some of the record highs that we've seen, and not ridiculously exciting in terms of lower prices. And in an incredible way, stocks already coming back, definitely faster than expected here on sort of a recovery here, which was potentially, who knows if that's sort of indicated by the VIX. Is this just a sort of a warning shot on the VIX? Is it what do you call it? Is this the peak of volatility? See, take a look at this. Type in VIX. You get, let's go out to 1 month. Again, you get this spike here on the VIX going out to the 6 month. You see that peak out here to May 12th. And remember, these peaks, as we mentioned earlier in the video, they tend to come, you peak, and then you see that rotation down usually, unless, of course, you're building up something like this October crisis, where you had these peaks and you ended up getting higher peaks thereafter. So we'll see. But right now, the market is actually digesting the madness of what was going on this morning quite well. The indices recovering. Russell, what is going on with the Russell here? The Russell just went green for a moment, and now it's down 2.46%. That doesn't make sense. Hold on a second here. Is that true? Yeah. That is so bizarre. What happened there? Can I get the Russell 2000 showing up in here? That's bizarre. Because, yeah, here it's showing us that very, very, very weird. Okay, we are getting more green in individual stocks, including the airline stocks going green again. They've been weird U-turners. They turned green, then red, then green again. Such an uncertain market here. ATER Smile Direct coming to the upside. Good buy the dipping on Hippo right now. You've got IronNet down, but otherwise you've got, let's see here, there's Hippo, there's Peloton, Pfizer, Restoration Hardware, Booking Holdings, let's see here, Lululemon, Fannie, Boston Beer. Kind of trying to, I mean, a lot of green here as we're opening up. It's really good. Look at that, green rotating up to the upside nicely here. Let's look at Home Depot and Lowe's. Home Depot also green, Lowe's green. I mean, they're red on the day, but boy, oh boy, it's a strong kind of comeback here for a lot of stocks. Look at green and Voyager Digital. Wow, down 7%. HUD 8 down 7%, but also recovering. EXPI, same thing, some recovery. Meta Materials, rotation to the downside here on Meta, but again, 4 or 5%, big deal at this point. Really interesting. Matterport's only down about 4.5%. With some of these latest runners, you'd almost expect a larger kind of drawdown, but very fleeting what we had this morning. Bitcoin staying stable at around that 43, really having trouble getting above that 43.8 level. Otherwise, it's a broad red day. Not a good buy the dip opportunity. Not a very good buy the dip opportunity right now. Let's see. Southwest. Look at that. Peloton went green. It's incredible. Domino's, Target, Gap, Qualcomm, Boston Beer. Okay. Let's take a look at this. Meanwhile, as it's recovering, CNBC is saying the sell-off is intensifying.
So everybody's watching the 200-day moving average. 4106 is the 200-day moving average. That's about 7% below where we are. That's that gray line that you see. That purple line is the 50-day moving average. We've already essentially sitting right on that, slightly below it. So that would be, if we hit that 4106, Carl, that would be about a 10% drop. 7% below where we are now. We're already down about 3% from the old highs. And there you go. That would be the correction level. So everybody's watching that 200-day moving average, 4106 for the technicals. Carl, back to you.
All right, Bob, talk to you in a bit about Pisani. As we go to break today, let's take a look at the bond report, see how treasuries are doing. We mentioned yields down for the first time in 4 sessions, lower across the board, 10-year right around 1.327. We'll be right back.
Volatility Index looks like it peaked and not anywhere near where the volatility was intraday here. So volatility hopping back to the 24 range. We were almost at 26 on the VIX here. Pulling this VIX, let's go to the 1 minute here. Yeah, look at that. We ran up, according to Webull here, ran up to 25.66, really slowing down right now. And you get, again, I think it's very well worth comparing to May here, and how when you get these spikes, you rarely get multi-day spikes. You get these individual skyrockets and then often a softening. The only time I've really seen multi-day spiking was here in October, where you had this growing spiking, sort of a spike here to from about 27 to about 33, and then a further spike. But otherwise, usually the fear index spikes tend to rotate back to the downside. And that's a little bit of what we're seeing right now, where you get this substantial spike and then a decline. So not as bad as really things looked like they were going to be today. We've almost got a full page of green here, and really on the red side, not too terribly much pain. Some things, again, a warning shot in my opinion, for a lot of higher valuation plays. I definitely interested in like last week, raised a lot of cash last week, closing options, things that are still up that I could sell options on for an elevated price, willing to do that to raise money for what could be a potential longer term correction in marketplaces. See, look at this. Tesla's been a very interesting one today. Tesla did recover at the open, but now has rotated back to the downside. And so these are things I'm really watching. Am I going to get larger buying opportunities in things like Lemonade or Hippo Insurance or Affirm? I think the answer to that is yes. I'm also relatively patient in that I don't know that with the crises that we have on the radar right now, the infrastructure package uncertainty, the debt ceiling uncertainty, the uncertainties around Evergrande, the Fed, stimulus package, even number one, the hard infrastructure package. I think there's definitely a potential for a real dip. But we're not really seeing that today. Even though it's so broad-based red, this is not a very juicy buy the dip opportunity, in my opinion. So I'm watching though. Okay, so yeah, let's look at some other headlines here and see what else we got going on. So there's Doge, Ethereum, talked about those. And okay, then yeah, let's go hop on over to some other headlines here. Let's go Wall Street Journal. All right, so stocks fall on China property fears. Talked about this a lot. Pfizer, BioNTech say vaccine is safe for young children. I wonder if this is one of the reasons we're starting to see airlines move a little bit. Let's see here. Okay, realtors face federal scrutiny of broker commissions. That's interesting. The Facebook files, big 5-part series here that they've had. All right. So let's go to Barron's. Let's see what Barron says for us. Kind of a little bit of a buzzkill there. I was really personally hoping for a little bit of like more of a dip there to actually go shopping for something, but that was a little boring so far. Anyway, stocks are sliding on contagion fears. You talked about kind of a reason for this. I mean, we'll see if there's anything new particularly here, since we are kind of recovering in the indices. In fact, let's go ahead and just pull up just so we have the banner, just to kind of watch them here. Yeah, I mean, still down, right? NASDAQ 163, Russell 2.55, S&P and Dow around this 1.18, 1.34 region here. Not down as much as they were pre-market. Boy, oh boy, pre-market was a little more nervous for folks. But Evergrande meltdown are the prime cause of the sell down. A lot of comparisons to Lehman Brothers, crypto falling. Let's see. Commodity futures. Yeah, I did see also that Evergrande has a big, what was it? I had a shot of this. Oh, yeah, here we go. So, okay. China's total commodity supply. Okay, so of China's total commodity supply, its property sector consumes 40% of steel flow, 20% of copper flow, 15% of aluminum, zinc, and 10% of nickel. So Chinese properties in real estate development probably take up somewhere between 5 to 20% of global commodity supply. So that could be leading to some pain in commodities thanks to this Evergrande issue as well. All right. Wow. Very interesting market. Where is the dip that I can go buy? I don't see it. Okay, so sideways on Matterport. Looks like sideways on EXP. Turning green here on American Airlines. 2.5%. Delta 1.7. Blue Apron. Cardano back at 217. Nice Cardano bounce there. Very nice. You've got Piton barely. Piton now flat. Zillow Group 0.5%. Yeah, no real incredible major dips here. They're still talking about intensifying slide. I see a recovery.
Do well. Just putting it out.
That's good.
Don't want to be too negative.
Oh, that's good.
Some things could happen.
Jim, tonight, Airbnb?
Yes, special announcement by Brian Chesky. He's got something to talk about. I think it's about Landmark. Number of people who have used it. And then Clint Cornwell, you want a hot stock. Beauty Health. This is a company that is chaired by Brent Saunders. our old friend from Allergan.
Beauty's been a topic of discussion last couple of weeks, whether it's been Amazon or anything else. Jim, we got a lot of wood to chop today. We look forward to tonight.
Indeed. Fun show. Thank you.
Mad Money, 6 p.m. Eastern.
All right. Always the pitch for the night show. Look at this. Matterport here. I'm sorry, not Matterport. This is MP Material. MP Material, this one rotating more in the direction of straight down. Let's see here. 31.81. Also not like a particularly grand discount. Matterport, 5.26. Seems like a lot, but not when you put it into context. And that's what's so interesting about this market is when you really put some of these recent gains into context, they're relatively minor sell downs. Clever, 8.22. This one under 10 is a little bit more. Neo, let's zoom out on Neo. Day chart on Neo. Neo's selling down a little bit more. Although in May we got down to that 30.71. Arcimoto trading down about 4.45%. Affirm. Where was it here? Honest Company. Affirm. Where's Affirm? Here we go. Affirm. Yeah, Affirm's rising again. Look at that intraday here. You had your dip to about 108 and back to 112 now. End phase, you were at about 154, still about 154 now. Tesla still down about 3.51. Lemonade sitting around that $70 here. Redfin, Proterra. Incredible market. Just the gains it's holding on to. I'm not sure whether to be impressed or to be nervous about the follow-up dip. But it's incredible. Yeah. Somebody say Lucid went green. Is that true? I see. Oh, yeah, there it is. Look at that. Lucid went green. Oh, my gosh. Look at that. Look at that nice run it had here. It's incredible. Incredible. What a recovery. What a recovery in this market. I mean, this is like the most emotional market ever. Fine with me. But no buy the dip opportunity, but I'll be patient. All right. Cool. Let's see. Go to the headlines again here on CNBC. All right. 1.13 on the Dow. That's a recovery. 1.27 on the S&P 500. Still recovering. Yeah, I mean, they're all red, but boy, oh boy. This is the S&P. So you got a little bit of recovery and then a sideways trade here. Makes you wonder if this is just a temporary bounce and are we going to sell down again or what? People just wake up and like, it ain't that bad. Buy the dip anyway. Kind of incredible. Let's see if I can get Dow Jones Industrial Average. Well, no, it's volatility. It doesn't matter. Okay, let me see what market notes are on the terminal here. Yeah, no dip opportunity. I know it's crazy. Oh wait, hold on. What's this?
1 point to 76 on the National Association of Home Builders Wells Fargo Index. That's a slight beat and the first gain in 3 months. The street was looking for unchanged. Sentiment stood at 83 in September of last year and then set a record high of 90 last November. It then dropped off dramatically when lumber prices spiked and supply chain issues hampered construction. Price of lumber is now down sharply to about a quarter of its record high from last April. Builders do say delivery times remain extended and the chronic construction labor shortage is expected to persist. Now, of the index's 3 components, current sales conditions rose 1 point to 82, buyer traffic increased 2 points to 61, and sales expectations in the next 6 months steady at 81. Regionally, on a 3-month average, sentiment was still down everywhere except in the Midwest. That, of course, is where housing is most affordable. Morgan?
Diana Olick, thank you. We're 30
Housing affordability. That's going to be another big old issue. It's actually made me very interested in doubling down on real estate efforts because it's just I don't see housing getting cheaper anytime soon, unless of course there's a rate change. But anyway, very very interesting. Just that there's talk here about market is worried about contagion from Evergrande, but the problem is Evergrande has been running for several months now, the problem at Evergrande has been going for several months now. If you expect this to be China's Lehman moment, an orderly debt restructuring instead of a messy bankruptcy of a company deeply connected in the Chinese economy and financial markets remains the base case. If that's the case, and we do have some kind of restructuring, then the volatility spike that we're seeing here and sort of the sell-off that we've seen, there, Bloomberg here is saying maybe an overreaction. I don't know. Still looking for that buy the dip opportunity. But boy, oh boy. Okay, so let's see. What are you saying here?
Get financial help from a fellow developer. The country's largest real estate developer, known as Country Garden, is being quoted as saying that it's not impossible for the company to buy some of Evergrande's properties. So Evergrande has been facing a test this week as to whether or not it's going to default. First, we're going to see whether or not it's being able to make interest rate payments on Chinese bank loans, and then later in the week on some bonds. The big question has been whether or not Beijing is going to step in with some sort of bailout. It has been encouraging companies such as Country Garden as well as other banks to try to help Evergrande's liquidity situation, but the signaling otherwise, including through the state media, has been that Beijing doesn't want to be seen as endorsing this type of excessive lending, especially in the private sector. At the same time,
that's a good point. I mean, I think they'll figure. Honestly, I think this company will figure it out in the private markets and figure out how to recover by restructuring their debt, or some other group coming along to refinance the debt, so to speak. So nice little shock to the markets here. Not nothing that I think is super extreme right now, where the fear is ridiculously high. I don't see that right now. All right. Let's look at headlines on Bloomberg. All right. So here, stock sell-off deepens on China Fed Treasuries gain. Yeah, I don't see that though. I don't really see the sell-off deepening. I mean, unless they mean like today versus some of the red that we had last week, but big deal. But intraday, it's just not as bad. Definitely seeing something. I mean, look at that. Lucid's almost up 2%. And S&P 500, yeah, okay, sitting at that 1.4. Look at that. Dutch Bros went positive. It's now positive 1.7%. What a roller coaster. Absolute roller coaster. Yeah. And Hut 8 Mining now back to 8% to the downside. So potentially a little bit of a drawdown on cryptos again. We had been in a bounce since about 545. Yeah, no, mostly just seeing it stabilize here. Journalists write their copy and then head to lunch. Yeah, no kidding. Very fascinating. Well, I've got a whole lot of cash sitting around now to buy the dip, and when it comes time to make those purchases, make sure you have notifications on for those of you in the Stocks and Psychology Money group so you can see what I'm shopping for. Really watching. I'm going to be looking for deep reds. I'm going to be looking for opportunities. Hoping to see some red for a few days in a row to where I can actually look and go, now that looks like a price I care about. So far, none of these prices are jump up and down prices. Yeah, they certainly haven't gotten a lot more enticing in the last 30 minutes here. It's quite interesting to me. But anyway, yeah, okay. So Lucid up 1.43, Smile Direct 7%. Great job on Smile Direct. United, Delta, these guys going green. All right, let's listen in over here. As even though the stock market's not intensifying its downside, let's see what CNBC says about it intensifying.
With your funds, I mean, it is decidedly risk off in this market right now. You have the NASDAQ also dipping below its 50-day moving average, a key technical level there too. Are you a buyer on the dips right now?
So days like today are days when we're very happy we have a cash position. We can pick away at those companies that we've been doing diligence on. And when we get opportunities where they sell off $3, $4, those are opportunities. We do think risk assets are the place to be longer term. We've been preparing here in the last month that we thought we'd be into a higher volatile period, seasonally, as well as going into earnings season. Delta, variant has certainly impacted chip shortage, so supply chain, China. All these are significant risks, really near term. But when we look out over the next year or 18 months, we still find very good opportunities in a lot of those sectors to deploy capital. So, we would be more of a buyer on a day like today. It's not the time to panic and sell.
Interesting. David, we got 10 million.
Take a listen to this is an interesting tweet here. Thanks for the mention there. Rumor on Twitter saying that China has said they may get help. I mean, that's the thing. Is all it would take is China coming out and saying, "Hey, let's bail you out" or whatever. It's some kind of deal getting called, and your buy the dip opportunity evaporates, which is unfortunate because it'd be so nice to actually have a legitimate dip. But this is not a very exciting dip. I mean, I know the person on TV just mentioned, "Oh yeah, we're happy we have cash for days like today." Like, really? Like, today is like pricing is almost no different from what it was on Friday. Like, we're pretty much at the same place as where we were on Friday or the beginning of Friday. Not super exciting. Anyway. All right. Let's see what this person has to say.
Trade more broadly. We've kind of stuck to our guns here over the past couple of months as growthier sectors of the equity market have come into favor. And we still think that there's room to run in things like financials, things like industrials. It's not just an interest rate story to us, but really the idea that because we haven't seen this big surge in economic activity as we've moved past the pandemic, we could arguably have above trend growth for longer, which historically has supported those more cyclical parts of the market relative to those growthier ones. But we recognize the amount of uncertainty that continues to exist, particularly around the way that the consumer is going to evolve here over the next couple of quarters. And so we don't want to be completely over our skis in risk. We want to pair that cyclical exposure with very high quality exposure because we think that the names that are the biggest risk in the current environment are those that have relied purely on the multiple to drive returns. Higher interest rates are going to impact valuations. And so right now for us, it's all about following the earnings.
Hey, Chris, we're watching the market down 1.5% on these concerns over a property company in China that may go bankrupt. Do you have any concerns? I mean, does it affect? Are you perhaps less willing to take risk as a result of what you're hearing?
So I don't think Chinese real estate would really impact where we do our investing, which is more domestic. I think where people are trying to understand is what is the contagion? What does this sell-off cause other investors to potentially sell securities? Going back to what we saw with Archegos, is there underlying risk within portfolios that were tied to these that may have to unwind those trades? And I think you have to be patient over the next week or so to see what fallout comes from that. But with regards to here domestically investing, I'm looking at it more as a barbell approach. If we have some value in growth, I think that's a prudent strategy. If tapering does begin, which we think it should, the interest rate curve should steepen, which would certainly lean towards benefiting more of the value names.
All right, I'm going to go ahead and pull off this. Let's see here. So just looking at getting a little bit of a read here on Spark lines. Looks like, we've got MRIN rotating down, a momentum mover here. You've got Matterport moving down a little bit more here, 6.9%. Really personally looking for Matterport to revisit, ideally like a 14 or 15, but even a 16. That sort of range, that 14 to 16, is really, in my opinion, where Matterport needs to head back to for some reasonable buying. Looking at MP Material at 31.82, it's not particularly a big opportunity or a steal, in my opinion. Rather be looking for some of that May pricing to come back. Honest Company here, 5.41% to the downside. been on this incredible trajectory to the downside, unfortunately. Newegg obviously went momentum there for a moment, momentum hot and came back. SunPower, again, continuing its sideways trade here, along with Enphase. Enphase rotating down a little bit more to 153. A potential buying opportunities coming up for Enphase. I've been watching this one pretty closely. We did nibble a tiny little bit on that one last week. Also, Upwork 4.35% to the downside. Arcimoto here. See how it's doing intraday. Kind of all over the place intraday. Same thing with Affirm, although mostly up from its pre-market lows. Same thing with Neo, up from its pre-market lows. Lemonade, pretty much sideways with the pre-market, sitting there at $70. Tesla, down 3.3%. Also relatively sideways with what we saw in the pre-market. Yeah, EXP, probably, yeah, I mean, that just sold off a little bit more. Probably would have to really break the 3769 number. I don't know that we necessarily have to get into this May 20s range, but that's when you're at a much juicier level. And so I'm being very patient with this market. I have no qualms with waiting for my proper buy the dip opportunities. I don't believe that was today. I believe today was kind of a little bit of a disappointment, and I'm also impressed that the market was able to hold on to what it did, but I think it could pave the way for some more bleeding in the market here. So Affirm 3.84, Coinbase, okay, Monday.com, Tesla, yeah, Tesla sitting down here at 3.4, kind of rotating down or here again. See, even Roblox, I'd like to see Roblox back into like the sub 70 range. That'd be nice. Those are the prices that I'm really looking for. Yeah, pre-split prices on EXPI, no kidding, huh? Yeah, look, like Etsy 220. How is this a deal? Like, none of these things right now are screaming deals. Get AMC back to $30 and we'll go shopping again. Not saying that I want people to lose money, but again, like those are the numbers where it's going to be a little bit more exciting. Amazon, Alphabet. If anything, these larger guys dipping a little bit more here. Look at that. Facebook, Amazon, Alphabet. These guys all down about 2.25%. How are they behaving intraday? Gosh, I'm glad I closed my options on Google. That was lucky timing. Amazon 2.3. Remember, anytime I do sell, whether it's options, crypto, buy, sell, stocks, whatever, it goes into stocks and psychology of money. Send out an alert, the strategy. I'm going to try to explain too what my strategy is. So right now I've got more cash than ever, and I'm really holding that for potential opportunity. I'm not seeing anything that makes me so excited. So I do always have the worst case scenario U-turn of I can always. So the one thing is, you sell something, you could always buy it back, but I'm also just leaving the door open to just going very heavy on real estate. So I'm looking for the right opportunities. Yeah, got a little bit of softness coming back here in the market. Let me see here. Okay, yeah. The indices, with the exception of the Russell, the indices just got a little worse here. Oh, look at that. US to East travel restrictions for foreign visitors who are vaccinated against COVID. That's neat. I did a video early this morning about the talk about potentially Biden having vaccine mandates for plane travel. But anyway, what's this breaking news?
11 with Pfizer and BioNTech's COVID vaccine at a third the dose of what they give to everybody 12 and over. They also saw in this trial that the vaccine appeared to be well tolerated. They said side effects were similar to what people aged 16 to 25 saw in a trial, and they plan to file for emergency use authorization with the FDA by the end of September. Pfizer CEO Albert Bourla tweeting about the rise in pediatric cases of COVID we're seeing now and the substantial threat that the Delta variant poses to children. He says, quote, "We are glad to share this news with the world," talking about how they plan to submit the data with urgency to the FDA and other regulators around the world, and also submit for peer review publication. Right now, this is just a press release of the top line data. But guys, it comes at a time when pediatric cases are on the rise, comprising 29% of total COVID cases reported in the first week of September. That's way up from what they've comprised for the entirety of the pandemic, an average of 16% since the beginning.
I'm going to pull off this here for a moment. Look at this tweet that just came through. This is crazy. Steve Mnuchin raises $2.5 billion for a private equity fund. Holy moly. Goes to show that becoming Treasury Secretary is real profitable in terms of attracting attention. You know, what's also really interesting is there was a story about how trip to Middle East. Steve Mnuchin took a trip to the Middle East right before, like during the lame duck period of time. Yeah, look at this. Treasury Secretary Mnuchin's trip to the Middle East days before President Biden took office cost taxpayers more than $310,000. So in other words, Treasury Secretary Mnuchin traveled to Egypt, Sudan, Israel, Qatar, the UAE, Saudi Arabia in January. Cost about $300,000 for him to travel there. And now all of a sudden we hear that he's raising about $2.5 billion, most of it coming from the Middle East. Nice. Nice. Yeah. Wow. Wow. That's all I got to say is wow. All right. I guess I'll leave it at a wow. So, HUD 8 rotating back down here, 9.1%. MRIN 7.44. Planet 13's down 6.3. EXPI recovered a tiny little bit. Matterport 5.8. Most things here are relatively stable. It's like they got punched and now they're stable. Bitcoin's stuck at that 43.8 level. Cardano, I think, is what, 217, 213. Yeah, bouncing around that 213 level. It was as low as about 207 this morning, but really missing out on big move opportunities here. You're just not seeing them. So, all right. Well, hey, I think that about gives us our update on this very bizarre market. I'm going to be waiting for potentially a larger move here because this was kind of feel like we were all prepared for some real entertainment, and it's kind of like you went to the fight to see like a good show, and it ended up being Logan Paul versus Mayweather. Boring. All right, well, folks, get your free up to $70 stock with Public by going to mechkevin.com/public. Check out the programs. A link down below on building your wealth by going to mechkevin.com/join. Gonna jump on over right now to. I did a video on Evergrande. I literally did that this morning. Go check it out. And now gonna go on over to the course member live stream. And yeah, thank you very much for being here, folks. See you in the next one. Bye.